for joining us.
Thanks very much, Tiki.
Australian pearls are known as some of the best in the world, but since the global financial crisis hit, the local industry has been cleaned out from 16 independent players to just 3. It's been a slow and painful recovery for investors in one of those survivors, Atlas Pearls, whose shares are worth just a fraction of what they were pre-GFC. But Atlas recently enjoyed its best Japanese pearl auction result, amid signs the company and the pearl industry have overcome the worst. Neil Woolridge reports.
Pearls might be associated with luxury and glamour, but the global financial crisis sent some in the industry diving for cover.
And I apologise to shareholders at the last AGM, presiding over historically the lowest price of the shares in the history of the company.
Since 2008, the ranks of independent pearl farmers has been whittled down from 16 to just 3. Atlas Pearls and Perfumes is one of the handful still standing and farms its stock in the waters off Indonesia, using locals to seed the oysters and cultivate pearls.
What Atlas has done, and it's the principal point of difference, is put all its effort into selective breeding and worked with some key geneticists so that we get a strength in our stock that will help us withstand some of those challenges.
What's interesting with Atlas is we've grown throughout that 5-year period. So even in the really bad years, 2010, 2011, we were buying pearl farms.
But even then, it's been a white-knuckle ride for investors. Atlas's share price crashed from above 50 cents in 2007 to below 10 cents 18 months later, and for most of the last 2 years has traded between 4 and 6 cents before a recent bounce. In 2012, the company had to raise $4.5 million to shore up its balance sheet, thanks in large part to the GFC-induced collapse in pearl prices. But a recent pearl auction in Japan delivered Atlas's best result, selling 55,000 pearls for $2.5 million, 12% above the reserve price.
We've seen a 50% increase in prices in 2013, which was material. That was partially driven by a stronger global economy for our sector, but it was also largely driven by our own internal quality control measures and an ability to change our marketing strategies.
That has really driven what is an improvement in financial health. Still a little early for us to suggest that everything is square, but definitely going in the right direction.
Even the industry giant Paspaley hasn't been immune from the downturn, suffering losses in 2011 and 2012, shutting down farms and shedding more than 150 staff. But Atlas is on a 3-year plan to grow annual revenue to $25 million and has also branched into the perfume business to add another income stream. However, Elio D'Amato warns that pearl farming, like any other agribusiness, is subject to the vagaries of weather and climate.
The challenges of not only post-GFC periods, but also disease and climates and the like, and the havoc that they've played with the entire industry, has really seen a big clean out. Often that is good for an industry. Then what are left are generally the stronger performers.
And Atlas CEO Stephen Birkbeck is urging investors to remain patient as the company reinvests its small profits into future growth.
This company has got a strong and steady track record now where we've generated historically record revenues last year. We're still not ready to really turn that into profit because we're investing in our future growth right now.
The dark days of the GFC might be over, but it may still be some time before business is really booming again for Atlas and the pearl industry.